Hello, and welcome to Tech Latest from Nikkei Asia, where we bring you the freshest updates from the technology sector in Asia. I'm your host, Katey Creel, and in this week's episode, we're joined by Sayan Chakraborty to talk about India's deep tech ambitions. Welcome to the show, Sayan.
Thanks for having me, Katie. I'm very excited to be here.
We're very glad to have you. I think this is the first time we've had a guest from our India bureau join us. So
Yes, I think so, yeah.
Yeah, historical moment. So we're talking about your great feature that just went up the other day about India's startup scene. And it's a side of the startup scene that I don't think has been covered quite as much as the kind of more consumer-focused battle for ride-hailing, delivery, and e-commerce, where
Right.
obviously billions of dollars has been raised and it's fierce competition. So we're looking at kind of a smaller, but arguably just as important segment, deep tech.
Right.
So can you tell us a bit about the startup scene as a whole and why deep tech is maybe not yet at the level of consumer startups?
Well, Katie, it is to do with the nature of the economy as well. I mean, India has always been a consumption-driven economy, and consumption accounts for more than half of the GDP, roughly 55%. So it is no wonder that, whoever wanted to set up a business mostly wanted to sell something or the other to consumers.
Right.
And the first generation of startups were no different. And perhaps rightly so, because, if you look at the macro indicators, a huge population, a growing middle class, rising income levels, the macro indicators also kind of give wings to such businesses.
Mm.
So, if you look at the first generation of successful Indian startups, almost all of them were either e-commerce companies or ride-hailing companies or food delivery or home services. And,
Right.
by successful, I mean huge markup in valuations more than anything else, because it was an era where grabbing market share by undercutting rivals was the business model. And it was a cycle. The likes of Tiger Global, DST, Naspers, SoftBank, all the bulge bracket investors were pouring in,
Right.
and these startups were seeing huge valuation markups that drew in more investors, more investor interest.
Yeah, SoftBank was definitely one of those who wanted the growth at all cost, just get market share. And
Yeah, absolutely. SoftBank and Tiger Global have long been hailed as the architects of the valuation game in India. And they were pouring it into all these companies, like, be it Ola, be it Flipkart, take any name and you will find either SoftBank or Tiger Global in them as a sizable early investor. So and when it comes to this consumer thing, there were different companies in vogue at different points in time. So first it was e-commerce and ride hailing. This was circa 2008 to 2012, and then food delivery happened. Then home services happened. Then financial services happened, and the latest wave is consumer brands. I
oh,
mean, they sell everything from sauces and jams, noodles, cookies, healthier versions apparently, ice creams. And then there are a bunch of consumer focused VCs of reasonable size in India now. But truth be told, that frenzy around consumer game has reduced a bit marginally,
mm.
because people have realized that the space is hyper competitive. I mean, consumers are not very loyal, and perhaps they overestimated the consumer base as well. I mean, it's a matter of big debate in India whether the addressable customer base is 50 million or 100 million or 200 million, but definitely not exceeding that. In a land of 1.4 billion people, that's not a very rosy picture.
Yeah.
So they have realized that cash burn for growth is not sustainable. So they need to look at other alternatives, other investments, which take relatively less cash to scale up. So we see a lot of investments in software startups now, and what we call software as a service, basically. But still, all said and done, if you look at the overall picture of unicorns in India, I guess we have about 110,
Wow.
and roughly 60 will be consumer startups. So despite that, I mean, the heroes of our story, the deep tech companies, they still continue to languish. That's the long and short of it.
I guess part of that is kind of a snowball effect. Once you start having successful examples of consumer startups, everyone wants to replicate that. So that's what
Right,
everyone piles
right,
into. And trying to blaze a new trail is always much harder. Yeah.
right.
And probably one of the biggest challenges for the deep tech type startups, which we can describe what they are in a bit, is that they're not the instant revenue generating, easy to understand startup proposition. So they're a bit maybe harder for VCs to get their kind of heads around and to accept.
Right. You are absolutely spot on. I mean, path to revenue is connected with the complexities of building such a startup. Now deep tech is a very broad word, but there is a consensus in India that, anything to do with very complex technologies, like, people doing things in space
Mm.
or computer vision, medical devices, nuclear physics, semiconductors, robotics, all the hard things, they're roughly referred to as deep tech. And now the trouble with many of these companies is that they take time to build, and that is how it is, because a lot of research, iterations, testing goes into making them. I mean, they're not really like a software company that if there is a bug, I mean, it can be fixed in the next release. That's clearly not happening for these companies because they have a product out in the market already.
Mm.
If it is a buggy rocket, chances are that it won't reach its destination and the entire endeavor is spoiled.
Right.
For instance, a VC was telling me who's invested in a couple of these rocket startups that a rocket takes about 5 to 6 years to build, which is a long, long time. And even if it is built, you don't know if it will take off. And even if it takes off, you don't know that if it land up where it is meant to be. And if it doesn't happen, then for that startup, I mean, they have to start everything from the scratch.
Yeah, it's very high stakes.
Yeah, absolutely. And that again means another how many ever years, a lot of
Mm.
money, that just crushes the confidence. But if you take the consumer counterparts, like if you're doing ice creams, you possibly have a better visibility to the product roadmap that, the
Mm.
products can hit the market in 6 months. Or a food delivery company can say, I'll kind of enlist 200 restaurants and just get started in 3 months.
Yeah. And it's probably a bit easier too as a consumer facing company to pivot if your ice cream brand isn't working, maybe try a different dessert or a different related product category that's not like having to start over from a catastrophic rocket explosion.
Absolutely, a rocket has to be made under any circumstance. So you can't do anything about it.
Yeah.
So what these VCs tell is like, deep tech is a battle of nerves, and not every VC may want to fight that battle, because perhaps it's just not worth it.
Yeah.
Because at the end of the day, their job is to raise money and return the money to their investors. Deep tech is just challenging. There are easier ways to make money elsewhere, and they do that.
Yeah.
Uh,
Excellent point. Yeah.
as simple as that. And
Yeah.
also there is another challenge is also about the expertise of the investor. Since it's very technology driven, not everybody also understands deep tech. And now as an investor, if you don't really understand what the company is doing or how they are doing it,
Mm.
they're unlikely to invest because there is no value addition from them other than the money. So it's a combination of the nature of the business, and that it is time consuming. The path to revenue is always a few years down the line, and
Mm.
there are more easier and lucrative segments to make money from. That's also a very key point for most investors.
Yeah. Given all these challenges to the traditional kind of VC mindset and how important this technology can be to national interest, it kind of makes sense that the government is also starting to step in and say, guys, we need, I think what was the quote you had? Let's focus on fancy ice creams and cookies and more on, deep tech. So,
I mean, the government also has every reason to be worried because we are possibly in an era where every nation is chasing tech sovereignty,
mm,
geopolitics, trade wars, supply chain issues. They have forced them to take note of that. I mean, look at DeepSeek. Like, it was a jolt for everyone who thought America is winning AI and China was in trouble for all the sanctions on them. But when this particular thing came to light, everybody kind of sat up and took note, like nobody expected.
yeah, that was
So
huge.
yeah, and India is also thinking on those lines, and India on its part also wants to. I mean, it's set to become the world's third largest economy in
Mm,
a couple of years, and the government wants to make it a tech powerhouse. And the success can be debatable. Like, chip manufacturing is picking up, but of the six factories, one is a fab while the rest are assembly and testing units. So we can always debate how far India has gone. But broadly, like, India also has Apple to back up its claim to fame,
right.
and electronics manufacturing has generally been a high point in India of late. Now, the government is doing its bit. Like, there are some policy changes that has happened. Like, government now allows 100% foreign ownership in space companies. They have a ballpark 100 million fund
Oh.
to invest in space startups. And in this year's budget, they reserve 2.3 billion to be allocated for what they call research, development, and innovation by private sector. And the government is also mulling a fund of funds for VCs for investing specifically in deep tech companies. The size of that allocation for deep tech hasn't been declared yet, but there are talks around all those things. Now, India has historically trailed US and China
Hmm.
in R&D. And if you look at the patents filed by India, they are a fraction of both China and US. Like India's R&D spend as a percentage of GDP is less than 1%. China is at 2.5%. US is ballpark 3.5%.
Oh,
So
wow.
India lags behind. But now people also say, like, credit where due, like, because of these initiatives like fund of funds and all,
Hmm.
or the grants, and some of the grants can run up to like $3 million as well, which is pretty sizable.
Yeah.
uh, you know this is encouraging a lot of people to kind of think about launching these deep tech companies. At least the grant can take care of their living expenses, if not anything else. And if those researches and projects kind of become successful, and the VCs think like, okay, this is an investable business and not a science project per se, they come in and invest. But that said, Katie, truth be told, nobody thinks yet that India can match up to China or US in deep tech in at least the next 2 decades, because they're just way ahead.
Mm.
I mean, another data point for us to consider, maybe if we take all the deep tech focused VCs in India,
Hmm.
uh, their assets under management will be less than 1 billion. But two of US's largest deep tech funds, DCVC and Lux Capital, their AUM is $9 billion, and that is just two firms. So the difference is very stark.
Right.
One very interesting thing, one VC, I was talking to, he said, like, perhaps I won't see India matching up to US and China in my lifetime, but I'm happy that something is at least happening because it needs to happen. It's high time.
Mm. That is a great forward-looking sentiment, and I totally agree that everyone starts somewhere. I mean, even Taiwan, which is now the world's leading chip industry, it didn't start out that way. It started out as, an island with no industry. So
Right,
I think the fact that it's starting to change and that the government's kind of setting a new tone that, saying we are supporting deep tech, we think is important, I think could probably
right.
really be a game changer, as your source said, if not tomorrow, down the road.
Yeah, agreed. India is taking those steps, but again, I mean, it's a function of everything. It's talent. It's a function of how much capital the VCs will eventually want to allocate. Because again, they have to return money to somebody. So lots of things,
Yeah.
revenue potential, so on and so forth. So let's see. Everybody's hoping for the best, but everybody's also fairly cautious about not being overtly optimistic, because they know where the rest of the world or their potential benchmarks have moved really way.
Hmm. Thank you so much, Sayan. That was a really great look at India's startup scene and a side that, again, I don't think people know enough about. So thank you so much for being on the show and hope to talk to you again soon.
Thank you so much for having me, Katie. Pleasure.
That's all for this week's episode. But if you're interested in even more on the latest tech trends, be sure to join us on May 23rd for a special live event, the first edition of the Tech Asia live webinar. The event will feature Cheng Ting Feng and Sissy Cho discussing the impact of Trump's trade war on Asian tech supply chains. To register, you can find the link in our show notes. Thanks again for listening, and check back with us next week for more updates on the tech trends that matter.